Look, trading can be kinda difficult. But I'm telling you, there is hope. Because I'm gonna go over 4 things that are gonna change the way you trade, and you need to apply these before your trading day starts come Monday morning. Let's get to it. Now, we're not gonna waste any time, we're gonna get right into it. Number 1, we need to find our range. We're gonna go to the screen here in a second, but you need to know exactly what I mean. When we're establishing our range, is gonna establish the range that we expect to be trading in on the day, the highs and the lows. I do this every single day on the other channel, but this is going to help you with your trade. And I will say this may be the most important part of the video, so let's get to the chart. Okay, so we're gonna jump right into drawing our ranges. And basically what this does is show us how the market is moving. So what I do is I start with the indexes and then I work towards my stocks. So what we're gonna start with is the NASDAQ or the ES, which is the S&P futures, and this is gonna chart our range. Now, if you're using something like Forex or crypto, you can do the same exact thing with whatever pair you are trading. But with stocks, in my opinion, you have to focus specifically with the indexes. So that's where this starts. So I'm gonna start highlighting the key ranges and zones that we already know about. One is gonna be off the bat, the 12,000 range, roughly right here. You can bring that all the way back and we can see how this level is gonna get respected, and you'll start to see how this comes along as we go through this. So the 12,000 is a clear-cut resistance right here. We'll also mark out the top zone up here as well, going down to here. And then we'll also make a bottom zone for that middle level to see if you come back down in here. And again, you're gonna keep these ranges on your chart so you can consistently see them as you are trading, okay? So stay with me as we get into this. And this is how we are trading here. Now, what I'm gonna show you is actually how we're trading in this range here. And we're gonna go quickly down to a smaller time frame. And so what you're seeing is basically we are bouncing in and out of all of these ranges, right? So as you come into the 15-minute chart, you can see we'll come and break below that 12,000 region, come and test 11.75, pop back up, and if we break below this 11.75, where are we coming? Down to this bottom range down here, which we also know, if you've watched the other videos, I've explained exactly how I'm doing this, is your bottom range comes down to about 11.5 down to 11.4 flat. And you can also see, again, you keep respecting these ranges. So again, when you're in this range, you're charting to go up and down, you break through, you go down to the next range, back and forth, back and forth, back and forth. You break through, you go to the next range, back and forth, and so on. But your probability is to trade within said range. So if you're trading here, you always want to trade the bounce to the upside, back and forth, back and forth. Now, occasionally, yes, you will fall through that level like you did right here, but more than likely you will stay within this range because this is gonna be how you are trading. And if you wanna get more information on exactly how I'm charting these ranges, watch the price action video right after this one so you can get familiar with this as well. Now, number 2, we need to start selecting our trades or what we're gonna be looking at for the day. Now this may sound easy, but every day there's gonna be different things in different levels of strength. Today was a great example. When we go back to the charts, I'm gonna show you exactly what I mean. But primarily when it comes to trading, I recommend having your top 5 favorite stocks or whatever you may be trading, whether it be crypto, Forex, or just futures. With futures, you're probably just gonna trade too. But that's besides the point. There's other variables you have to look at, whether it be volume, the overall trend, the strength of the stock, because all these are going to change and have different variables going into each day to selecting our specific stocks. Now, you've heard me say in previous videos, I always recommend having your top 5 favorite stocks to trade when you're specifically into options. Now, for me, I like Microsoft, I like Nvidia, I've traded Google, we like Apple somewhat, it's a slower mover, we love Tesla. There's our big names we love trading, but that doesn't mean that I'm always gonna trade all of them. I'm gonna look for the best mover. Today, we got a great example of a stock showing strength. We went over to something like Microsoft and you can see overall somewhat of weakness here. But then when we go over to Meta, which is Facebook, we see pure strength. So all day long you trended to the upside. We go back to Microsoft. In the beginning of the day, you had upside and then downside for the remainder of that day. So you can see there is a difference. So you can use something like the FinViz heat map. Just type it into Google, FinViz heat map, and you can see which stocks are up the most and points. Microsoft moved a lot less than Meta. And you can typically tell this based in the pre-market when you're going into this as well. And then you also have to mark out your key levels, which again, come back down to knowing those key price ranges. So we saw here, when we go back to Microsoft, our key range was about 259.5. Early in the day, you got above that range, and then boom, you came back below and you retested and never got back to that level, as you can see there. But when we go to something like Facebook and Meta, you can zoom in here and you can see once you got above our key level that we had marked out, it was clear trading towards that upside. So you can see you broke that range down here at 160, and then you never turned back, pushing all the way up to our next range of 165. And if you want, you can zoom out a little bit further and see how we're finding these. You can see this is a clear top, and then this is a clear support right here as well. And that's specifically how I'm charting these every single day. Going back to Microsoft to give you a better look, you can also see where was our key level up here. You might have to go a little bit deeper, but you can see that resistance right there, and here, and here, and here, and here. Multiple tests all through that level. And then you're coming back down, back towards that next level range, which is about right here, and you get stuck below that level, coming back up. So we can see the weakness is on Microsoft and the strength is on a stock like Facebook. And you're going to see this happening again and again in the market. That's why people always are wondering, well, why is Tesla moving up and you have something like Apple that's barely moving? You need to be watching to see which stocks have their strength. Now, number 3 may be one of the most difficult parts of this video, but it will definitely change the way you're making money, and it will 100% protect your portfolio. Adjusting your positions. So let's say you're on a trade and you're looking to take some profits. Now, me personally, I'm a really big fan of taking all my profits at once, but this week in particular, this has helped me retain more gains, specifically with the trend. So let's say I enter a trade with 10 overall contracts on options. I may only take 5 off for profits and let the rest run. Let's give you an example. Okay, so bear with me and kind of try to follow along. Microsoft. I was trading this on Thursday going into the week of July 15th, and I had calls betting it was going to go up. So as we come back to Microsoft's chart, this was our trading day right here. And we had specific targets in which we were looking at. We can go back to this and we can actually see we were targeting 254, then 255.5. Going into this, we can mark those out very quickly so you can see 254 roughly right here, 255.5 going into this level right here. Now, when we enter the trade, we can also see the time in which we got into that trade, 12:27 p.m., roughly around noon. So you can see that entry was about this point right here. And we'll actually mark that out really quick so you can see. So this is basically we're getting in on that breakout of this level right here. So as we're looking here, I enter with about 10 contracts when going into that trade. Now, as I'm getting into that, you can also see at around 12:41, only 20 minutes after, I start cutting some of my positions right here. Not necessarily at our target. You can see coming into this range right here, we're hitting that top level resistance. So I said, I'm gonna start cutting some of this position, right? And why am I doing this? I am doing this to start securing my overall profits. So you can see I was already up about $600. So half of that, $300 and around $15 roughly, I took for profits and let the remainder to continue to run for overall more gains to try to hit those key levels. And you can see at the end of the day, they started getting roughly to $3 overall, and they went absolutely crazy. These actually ended up running past $4. They went absolutely out of this world, doubling up from their overall gains. So those actually right here were only up about 30%, and then the remainder of the contracts ended up running towards our target up here, right there. And that's where we started taking those overall gains. And why do we split it up like that? Because let's say by some chance this chart, we don't break up to the upside and we start coming back down. So we take half our profits here, we're trending, we never hit profits, and then we start tanking and we get stopped out of the trade. Well, maybe we get stopped out of the trade, but we're still gonna make money because we took profits on half of our position and we weren't getting greedy. And this is how you're scaling in and scaling out actively. And this is a real example because this is exactly what I did. And a lot of people had bigger or even smaller positions, and they're constantly adjusting this for themselves as well. You stayed here till the end of the video, congratulations. Now this is going to be the most difficult for you, the viewer, because I know you like to take a million trades and I know you think getting up from your desk is a mistake. I'm gonna show you specifically why you need to take breaks during the day. There will be exceptions, but for the most part, I've been designating specific times of the day to get away from the desk so I cannot trade and so I cannot even be looking at some of these plays, because half of the time you're gonna start giving up the gains that you just previously made. Let me show you why. Last but not least, we're gonna talk about why you need to get out of the market sometimes, or you just kind of need to step away from your desk. So this is the S&P, this is SPY. And as you can see in the beginning of the trading day, you were moving very, very good. Basically for the first 2 hours of trading, straight to the upside. But something happens around lunchtime, and you can kind of see this going trend almost every day. You start to move sideways. Right here, starting from about 11 a.m. all the way roughly towards 2, you see very little movement. And so during this time, this is a lot of chop, up and down movement. You're not necessarily getting a breakout to one side or the other. And so when this happens, typically I like to take a break and then come back around 1:30, the last hour and 30 minutes of trading. So I take about 2 hours off during the day and then I'll start to come back. And this is very important because this is enabling you to get away and not take the bad trades. When at the end of the day is typically, and the beginning of the day is typically when you're getting the best moves. We can come back again and again to see these specific types of movements. So you can see right here as well, going in from the market open right here, roughly until right around lunch, 11:30, 11:40, right here. Great movement. You drop, you pop all the way back up, and then going around lunchtime, what happens? So about 11:15, all the way into roughly right here, you see a lot of sideways action. Yeah, you get a little bit of a bounce, but it's not much. But then you can start to get that breakout right here, roughly at 1 o'clock. You break out of that range and start to push back to those highs, setting up for another bullish day towards the upside. And that's where you're going to get that action, that volatile breakout right there. Some days you'll get some of that lunchtime movement, but it's all about identifying when you need to step away and when the highest quality trades are there. And even I am guilty of over trading sometimes, but you have to have the discipline to tell yourself, enough is enough, it's time to step away, and we'll be back in an hour. Now, just for the sake of the video, I want to highlight Bitcoin because this goes into stocks, crypto, foreign currency, whatever you're trading. I promise you there are levels of stagnation. Now with Bitcoin, for me personally, I notice going into the weekend is when you see the most amount of stagnation. So you can see right here, yes, it's still kind of volatile. I'm not gonna lie to you, this is still volatile, but you see some of the choppier movement is here on the weekend, going into Saturday and Sunday. Go back here, once again, you can see Saturday and Sunday right here, even a little bit of Friday, a lot of slow movement, but going before in the major parts of the week, up and down, all following the trend and then stagnating. Right here, Monday all the way through Friday, upside, stagnating. Right here, Monday all the way through. Now we're going into Friday. Chances are you're gonna start stagnating into the weekend because why? This is just when Bitcoin starts to slow down. So if you're trading Bitcoin, maybe the weekends are some of the times you should step away from the market because that's when the volume dies down. And this is going to be just for you as well in whatever you're trading. So take the time, spot when markets slow down for you and when it's least profitable for you to start trading. What I did is I started journaling when I was trading and when I was entering trades. And then I marked out where my losers were. It was very easy to identify where the times were when I was losing the most money. And most of the time, it was during times of chop in the stock market where there just wasn't that much volume. Look, some of these may seem very simple, but I'm telling you, when you start focusing on the little things, it will have a major impact on the overall scheme of your developing strategy and your portfolio.